All-time highs, but not for Bitcoin, for specifically precious metals. When you go to the charts of things like palladium, things like platinum, things like silver, things like gold, they've all reached brand new all-time highs, whereas the price of Bitcoin, whereas the price of altcoins have been severely lagging behind. And actually, for things like Ethereum, you're now printing bearish structures. And I also have some very upsetting breaking news that I want to briefly mention. It is regarding increasing geopolitical tensions. We know from recent history that whenever we see increasing geopolitical tensions, regardless of what it does cause markets to see a shift to the downside. So those will be the topics of today's video: the relationship between commodities and Bitcoin and altcoins, and also briefly looking at national debt and talking about how the debt cycles have shifted from being 4 years now into 5 years, and how that changes the entire macro picture for Bitcoin. If that sounds interesting, make sure to watch until the end of today's video, and make sure to destroy the like button for daily content, as we do post daily content. I'm actually not sure why this camera is so zoomed in, so I do apologize, but make sure to destroy the like button, subscribe, and turn on the notification bell. With that said, let's begin off with some Bitcoin price analysis, and then we'll get into our commodities, and we'll end off with some Ethereum and some business cycle liquidity talk. When we come to Bitcoin, Bitcoin is still beneath this downward sloping resistance line. We are still not above that line of resistance. We're still below the EMA ribbons on the daily time frame. Bitcoin is struggling, but time is ticking. Time is ticking. We're yet to see a breakout, but it's going to happen, in my opinion, by Friday. That is the real deadline. Maybe by Monday next week is my maximum time frame for Bitcoin to decide which way it wants to go. We have two parameters. If Bitcoin wants to see a break to the upside, we need to break above 91.8, close above 91.8 for two consecutive daily candles, and then the target is going to be 107. If we fail to do that, and unfortunately for me the bearish case is a little bit more attractive, then liquidity will be grabbed below the 74K levels. Why is the bearish case more attractive? Are we printing an exact copy of April 2025? We're not. There's a difference. When you zoom out into the weekly time frame, at that point we weren't in a bull bear market transition phase. We were still in the 4-year cycles. We were still technically in a bull market. We were above or in the EMA ribbons finding support, but now we're seeing the EMA ribbons cross bearish for the first time since the bear market transition, from bull into bear market transition in the last cycle. I ultimately believe that Bitcoin is going to reach its daily 200 and do a wick like it did in the last cycle. I think we will do a wick like we did in the last cycle. I went too far back. There it is. That was a test of the 54 simple moving average on the weekly. It was a test of the 200 daily moving average. I think Bitcoin will do that. And whenever you see bearish crossovers on moving averages, they magnetize price into them. So I think Bitcoin will reach it. Is it going to be a dump first and then reach it, or is it going to be move straight upwards? That I'm not 100% sure about, but it doesn't change the plan. The plan is to short Bitcoin at that 200 daily moving average, and I'm shorting between 99.5 all the way into 107. If you also want to short Bitcoin at those levels, you can do so using the link in the description down below for weeks to get the best bonus available. That's Bitcoin in a nutshell. Now I want to go into precious metals. Gold is now at $4,400 per ounce. Silver is at a whopping $69. We were calling for silver all the way down at $19. We identified this huge macro cup and handle pattern when silver was down at 19. And I was telling people on this channel that silver has a bright outlook. I think silver will do much better. I think silver can reach hundreds of dollars at some point. I'm very bullish on silver. And I talked to my grandmother's mother's friends today. I saw them about a year ago, and I told them that silver looks like it's ready to run. And it turns out they actually invested in silver, and they gave me enough cookies and sweaters to last me decades. It was so funny. I'm so bullish on silver. The fact that we're seeing things like palladium, look at palladium rocketing. Gold dominance is dropping a little bit. The precious metal alts are running more so than gold. Platinum has run from $1,500 less than a month ago, now at 2.1. That's over a 40% push for platinum within a less than a month time frame. That's altcoin season stuff. It's insane. It's unbelievable. The only thing that bothers me about platinum was that Peter Schiff called it perfectly, and that stings. It always stings that Peter Schiff is right. But we need to remember that commodities and precious metals and scarce assets and Bitcoin, we all fight on the same team. We're all about scarcity in a world of infinite abundance that AI is going to provide. So scarcity is what is truly desired. And I think the fact that we're seeing precious metals experience a run to the upside foreshadows that we're about to see the ISM data, which looks into the business cycles, start experiencing an expansion. What is the ISM? For people that have not been watching the channel, ISM is the manufacturing data. So ISM looks like the amount of production, the amount of goods produced, the amount of labor working in factories for production. It looks at manufacturing. Its focus is on manufacturing. If there's more manufacturing, it means that there is demand from consumers to purchase. If there's more manufacturing, it means more investment into labor, more investment into factories, more investment overall. How do you get more investment? Well, companies need to borrow money from the bank at low interest to get the money, the capital, to invest into more labor, invest into more factories, so on and so forth, to produce more goods. Because there is more capital available, because the rates are down, and traditionally it's during QE, then also people in turn have money in their pockets to be able to buy those goods. So whenever the ISM is over 50, it literally just looks at liquidity. It's an indirect way to look at liquidity. Whenever you're at 50 and above, it means that the economy is expanding. The GDP tends to grow. The GDP in America is growing 2.1%. And once the GDP starts to grow, that's also a time, it's just a great time for people to start buying up stuff. Traditionally, the ISM, the business cycles that also tracks liquidity, they've been moving in 4 years, adjacent to Bitcoin's 4-year halving cycles, adjacent to the American electoral cycles. So it's all been coincidentally the same. But for the first time since Bitcoin's inception, the business cycles have shifted from 4 years into 5 years. How has that happened? There's a national debt, remember, of 38.5 trillion. This started to skyrocket during COVID because during COVID, the government printed half of the money in existence. This year, the government was supposed to pay $6 trillion worth of interest on their bonds. The government raises money, think of it like a business, instead of raising money through equity, like what MSTR does to buy Bitcoin, they raise equity by issuing bonds. And they promise interest payments to the people that purchase those bonds. But because they issue so much bonds and the government doesn't make any revenue, they can't pay the interest. So they issue more bonds to pay off the interest. And it's a pyramid scheme. It's a literal pyramid scheme. So they couldn't pay off the 6 trillion. There's no way they can do so with the interests being almost at 4%. At 4%, they will end up paying hundreds of billions of dollars, hundreds of billions. It doesn't make sense. The GDP of America is down at 2.1%. You can't keep the interest rates this high. So the Treasury is begging the Fed to reduce rates. The Fed doesn't really care about these things, but they should. So they need to cut rates to pay less interest on the national debt. They've rolled it over from 2025 into 2026, shifting the business cycles from 4 to 5 years. And between January to June of 2026, the government is going to have to raise over $9 trillion of refinancing. And they very, very conveniently changed the rules of how much treasuries American banks can buy. Starting January of 2026, American banks will be able to purchase more treasuries. So they know what's about to happen. We're about to get a Fed chair that is more pro-Trump monetary policy. We're about to see quantitative easing. QT already ended. So we're about to see a bunch of liquidity being injected. You look into the Michigan survey of economic conditions, it's at massive lows. You look into social interest for crypto, nobody cares about crypto. Nobody cares because nobody has money. So we need to give people money ASAP, and that's going to take place in 2026. It will take about half a year to a year for money to transfer into the markets, but when it does, going to 2027, I think we're going to have a super, super fruitful time. This is why in the macro, I'm quite bullish. When it comes to Ethereum, Ethereum follows the business cycles beautifully. On the weekly time frame, Ethereum is forming a very nice ascending triangle continuation pattern, which in my opinion will eventually break towards the upside. But before it does, before it ends up doing that, even if Ethereum corrected to the sub $2,000 levels, like 1.8, 1.9, it would still theoretically be bullish. And if we do lose this daily head and shoulders as support at 2.8, I think we will come down like $1,000. I have a lot of Ethereum long positions that I opened up since about April, and we've made so much money on them. I just want to warn you that if Ethereum starts breaking down, I'm going to take profits and open more limit orders to buy up Ethereum at the supports of this triangle. Guys and girls, that concludes today's update. I hope you enjoyed it. If you did, again, give me a destruction of the like button. Let's try to break it so that it doesn't work anymore. And thank you for watching. See you soon. I apologize for the very close-up camera. Take care. See you on tomorrow's video. Bye-bye.